Today's Friday, 17th of July. I'm coming into the market open today after yesterday. It was a little bit of selling, but nothing major. The S&P is still holding up relatively well, but the real story is probably the Nasdaq. The Nasdaq, which did have more selling than the rest of the major indices, and also closed below its 50-day moving average. And also coinciding with that is the fact that the 10-day is now below the 50-day, and the 20-day is looking like it will probably fall beneath that 50-day during the next trading session. So just having a quick look at the Dow Jones. Dow Jones is probably one of the strongest indices at the minute, holding up a little bit better than the IWM. The IWM's gapping down in the open today, and the 10 days sloping below the 20 and looking like it probably meet up with the 50 relatively soon. So just based on kind of what the major indices are showing, they're showing a slight weakness in the Nasdaq, which is basically tech dominant. So that makes sense with the fact that the semiconductor ETF is getting absolutely battered, and again gapping down for the third consecutive day. Or it'd be the second consecutive day. But yeah, clearly heavy selling coming through semiconductors, and again the 10-day is falling below the 50-day, just like in the Nasdaq. So yeah, the fact that we're kind of seeing this weakness present itself, whilst the market's staying relatively stable, I would say it's probably a good sign. I know that a lot of kind of leaders recently are starting to fall off, so that has probably been a reason why the market's held up as well as it has done. AMD being one of those leaders, and similarly to we just saw gapping down for 2 days in a row, and now below the 50-day open will likely be opening below its 50-day moving average. So I'll be interested to see how the major indices kind of react when or if this pressure into the coming from the leaders continues. So Google is a big one that I saw a lot of people talking about yesterday. The fact that the 10-day and the 20 days but been below the 50 for a while, and there's been 2 tests, underside retests of the 50-day, and a massive rejection yesterday, and now gapping down into the open. So that's clearly not a good sign of strength. And then Dell was probably the other leader that I had my eyes on, and it's holding up better than the other two, but again, it's not looking super great. So just taking a quick look at space stocks. Again, they're still just getting absolutely battered, and it doesn't really seem like any recovery is going to come in for them anytime soon. The healthcare and biotech sectors. Healthcare is looking a little bit more promising than biotech. Healthcare is actually looking like it's going to test these highs and potentially make new highs. It's held the 20-day rise in 20-day as support, and yeah, still pushing into all-time high territory. So healthcare potentially leading or holding the market up, which I guess wouldn't really be a good sign. Healthcare is usually a bit more volatile than other stocks and sectors, so I wouldn't really feel comfortable or confident putting on risk based on the fact that healthcare is leading the way. The energy sector is also continuing higher. Not exactly what I'd want to see, but the fact that precious metals are still coming off, and no kind of signs of hope coming into their markets, is I guess a sign that money is still kind of trying to find a place to park itself. The most logical place would obviously be bonds and yields, but they're also kind of taking a little bit of heat after the than expected PPI and CPI data that came in earlier this week. So there's kind of mixed signals. I'm having a hard time getting a clear read on what's going on. It just feels like there's a lot of mixed signals and there's a lot of chop going on, and there's clearly some rotation happening. But I guess it needs more time to digest to see if it's actually sustainable, or if it's just kind of late dip buyers hoping that the market's going to make a recovery or going to continue its next leg up, which I would expect those late buyers to potentially get stung before, without having kind of a real flush out after such a move that we had in April and May. It would make sense that there just needs to be a little bit of pain before we can continue higher. I guess the biggest thing that I've noticed across the breadth indicators, no real movement on the number of stocks above the 20-day moving average, but the number of stocks making new monthly highs did spike about 55% yesterday, which is a fairly decent move. But then more notably, the number of stocks making 52-week highs spiked over 100%. So coming in towards the upper end of its range and definitely moving away from where it has been towards the lower end. So that's made me feel a little bit more confused compared to what I was before, because that happened whilst the number of stocks making 52-week lows also spiked, albeit only 30%. But the number of stocks making new highs spiked massively, 52-week highs, whilst the indices are staying relatively flat. So I'm not really sure what to make of that. It kind of feels like there's just some laggards that are being bought up that are making their 52-week highs, but ultimately they're not strong enough to push the market higher. So eventually, when those stocks kind of lose steam, is that what's going to be is that what's going to cause the market to eventually downturn? I guess that's the biggest question. And then just taking a look at Stockbee's primary breadth indicators, yesterday was clearly in favour of the bears. Clearly a lot more selling for stocks, despite the number of stocks making 52-week highs, pushing up massively. It's really mixed signals, really not clear, which I guess is the definition of a choppy market, a choppy sideways market. It's not clear. It's always going to entice people in and out of the market at the wrong time. So I guess just looking over the past week or even 2 weeks, it's clear that it's been fairly balanced, but for the most part, the bears are in control, and there's more selling coming in as opposed to buying. So yeah, I guess based on those things alone, all of that, I'm gonna come into the market today with neutral bias, expecting more chop and sideways action, but at the same time leaning more towards risk off and being a bit more cautious.